You guys are watching this video right now all over the world. You're alive and blessed. Can't really complain. Welcome to Misunderstood and MYB trading course. In today's session, we're going to talk about market mechanics and how do we trade market mechanics using a method we call scalping. For this example, we'll be using the 15-minute time frame and the 1-minute time frame or the 5-minute time frame depending on your preference. Before entering the trade, guys, we'll be looking for 4 criteria. First, we'll wait for the liquidity sweep to happen. Then we will wait for the flip switch to happen. Then we will wait for market shift to happen. Then we will want to enter at the demand zone or the supply zone. So with that being said, guys, we're gonna move right into it in the first on the 15 minutes. So this right here, guys, is the first 15-minute time frame. As you guys see here, price went up to form a higher high, came back down to form a higher low, but went back up to fall a higher high, but it failed to, and it eventually formed a swing low. Below every swing low, guys, is where we call liquidity. So since we had a swing low right here and price break off here and form the market shift. So after price form the market shift, is going to always pull back. So as you guys see price pull back here, so a lot of retail traders will put their stop loss below the swing low at the first demand zone. So this was our first demand zone here, and this was the extreme demand zone. The demand zone is where price will always come back to. Price can always mimic off the first demand zone and then continue going up. But 8 out of 9 times, price will always come back down to the first, for the last extreme demand zone, because that's where price started the break off structure from. As you guys can see, it formed a higher high, a higher low, and here price mimicated and went back up to break off structure over here. Then it came back down and formed a swing low. So a lot of retailers will will enter the trade above here and put their stop loss below here. That's where liquidity will take place and form a sharp V shape, then coming right back down and kick all you guys out the trade and still end up going in your guys' direction on the 15-minute time frame on the bullish side, and then vice versa on the bearish side. Price came down to form a lower low, went back up to form a lower high, came back down to form a lower low, but it failed to, and then it went back up to form another swing high. And above every swing high, guys, you guys will find liquidity. So a lot of retailers will enter the trade on the pullback and put their stop loss above the swing high. Institution and hedge fund traders and banks, they know this. They know you guys have your stop loss at every swing high and every swing low. So what they're gonna do, they will come down, mimic and fake price into going in your direction before coming back down and form a sharp V shape. Every time you guys see a sharp V shape, that's where the liquidity took place. And you guys can see it was a first order block here. We have the first resistance zone, which was fine, but you guys have to wait. There's no rush to enter the trade just because price came into the supply zone. You guys have to be patient and wait for price, because you guys see, even though you guys was right, but you guys entered the trade a little bit too early before the liquidity sweep. See, it was a liquidity sweep, and like I said, it was another supply zone on the top. Price is going to always go back to the extreme. So you guys got to be patient and do not get caught in liquidity and price still end up going in your favor, but you was not in the trade because it kicked you guys right above the swing high. So after we identify on the 15-minute time frame, on the 5-minute time frame or the 1-minute time frame, you guys want to wait. You guys want to look for these setups right here. These setups is the key. Take a screenshot of this setup or whatever you got on a bullish market and on a bearish market. Same way, guys. See, price went down to form a lower low, lower high, lower low, and then you guys see how the market shift right here. So as soon as the market shift, price is going to always retrace back up. So price eventually retraced back up here, grabbing all the liquidity because swing low was on the bottom of here, and a lot of retailer traders want to enter the trade right there and put their stop loss below there, and liquidity came right there, kick you guys out of the trade, and still going in your guys' favor. But what you guys want to do, wait for price to break the previous low, the previous high, sorry. See, it came back down to form the lower high, and then it went back up. So as the moment price break it here we have the market structure. So the market shift from a downtrend back up to a bullish. So as price break the previous high, wait for the pullback, as the pullback will always come. And guys, make sure that when the pullback occurred, the pullback never break the previous low. It stay right above it on the demand zone, and that's where you guys want to enter, and you guys want to ride the wave up. Vice versa, on the bearish trend is the same principle, guys. It's everything. One thing about the market is always have the similar pattern. You guys, once you guys understand the pattern, price is gonna always respect this pattern. Maybe 5-10 years from now the market is gonna change, but right now it's doing the same thing every day out. Nothing new, just the same old pattern. So in this scenario, guys, we see price went up to form a higher high, came back down to form a higher low, and right here, as in the first video I talked to you guys about trading patterns. So see how price came back down to form a bearish double top. We have a top right here, came back down there, a bearish double top. Eventually price break off structure right here, right? See how price pulled back, and then it mitigated to form a swing high. The swing high is key, guys. You guys must understand the swing high, because if price was going to continue to go up, it would have break this right here. It would have continued, this price right here would have eventually form a higher high, a higher low, and it would have continued to form a higher high, but it didn't. It formed a swing high, and above every swing high is the liquidity. So do not be liquidity, guys. So wait for price to come back down and break the previous high. So once it came back down and break the previous high, now we guys know it's a swing high. And like I said, on top of every swing high, we would find liquidity, and price swept the liquidity, eventually coming back down. And then we have the market shift right here, and at every market shift, price is going to always retrace back to the what, supply zone or the demand zone, which price did occur right here, eventually coming back down your guys direction. So with that being said, let's go on the chart, and we're going to look for some example on how do we trade and how do we scalp. So in the 15-minute time frame, guys, what you guys want to do, let's clear this chart out. Let's clear this chart out. So we're gonna come on the 15-minute time frame. So what you guys want to do, right? Simple as this. See, over here, you guys see price was on a downtrend from top here. Price was on a, first of all, price was on a high first. Price came down to form a higher high, higher low, higher high, higher low, higher high, higher low. Came back down, form a higher high, higher low. And you guys see here, we would mark this off right here and call this the market structure, because this was the previous low. So we want to wait the price to break the low. See how price came back down, form a higher low, lower low. Then eventually it fights its way back up to form a higher high, higher low, high, and then bam, right here is the play ball. Market shift happens from a downtrend back to a bearish. So what we want to do is going to always be a pullback. So in this scenario, we want to come here to drop our demand zone, which would be the, see that price is already mitigating it right now. So we want to put our demand zone there, and our resistance, which would be the highest point where price went to, which was on the top here. So now that we identify our resistance and demand zone, what we want to do now, we want to wait patiently for price to pull back in our direction. Now the price is on a, see how guys now let's explain this now. Price came back down, all the way down, form a market shift to an uptrend, pull back, and you guys could have entered the trade right about here on the pullback. You guys could have put your pullback right here, and right here would have been another demand zone above here, just waiting nicely for you guys, and your stop loss above it. And same, just ride the train up, just like that. So now we move to the live chart. As we can see, prices on the live chart, price pretty much came up, break the pass, break here again, form a next one. As you guys can see, all of these break off structure mark, you want to trade with the trend, not against the trend, guys. So price eventually came up, form a higher high, and price slowly came back down to mimic where it started, the demand zone. So what you guys want to do now, you guys can get another long position, and you guys could put your long right here, on the 15-minute, if you guys prefer the 15-minute, trade the 15-minute, and you guys can put your stop loss below the demand zone and wait for price to mimicate it and trade up. Now, since price is already in the demand zone, what I usually do, either I go on the 5-minute time frame and the 1-minute time frame. That's where the fun really happens. So you guys can come on the 1-minute time frame. If you guys, I would recommend first you guys trade on the 5-minute time frame to understand the 5-minute time frame than trading on the 15-minute time frame. On the 5-minute time frame, because if you can't master the 5-minute time frame, you won't master the 1-minute time frame. So as you guys can see, prices in our demand zone, right? So what we want to do, let me see what we want to do. We want to remove this right now. Let's clear this up so you guys can see. Simple as this, guys. Simple as this. So as you guys as a scalper, what you want to do right now, you guys want to mark this up. Open this a little wider for you guys. Since price enter in our demand zone, what we would want to do, we can simply come at a 1-minute time frame, put our short right here and our long above to the next demand zone. So we want to put our long there and our stop loss below it right here, guys. And we can come up on a recent demand zone, which will be right here, right? So as you guys see, first price came back down to form a market shift over here, right? So like I said earlier, the market shift is the key. So once that we identify the market shift on the 1-minute time frame, we want to wait for price to eventually pull back to where the market shift took place, which was over here. So we're going to mark this up here, guys. We're going to mark this up here. Then we have a next one here, a next supply zone up top here. All of the same example I just showed you guys earlier, guys, right? So what we would want to do, either you guys can short it here, or you guys can just wait for price to come back in this area right here where the market shift happened, and you guys can enter the trade on a short. Everything is about waiting in the stock market. 99% of the time it's just about you guys waiting in the stock market. So it's nothing you could do until price come back up and break first. Maybe price it's still on a downtrend and it will come back down eventually, or you guys want to wait for price to break this right here to form the market shift. And once price get up in this area, that's where you guys will be looking for your entry. With that being said, I hope this video find you guys helpful and impactful. And I will be making more videos in the future about resistance and supply level. The trading market is the key, guys. It's the key to financial future day. So once you guys stick to a trading plan, always have a plan. Do not jump into the trade to just buy or sell. Always have a plan. Use a broker that have fast, efficient trading, and focus on high volumes. If you guys are trading Forex, focus on the high volume session. I would recommend you trade the London session or the New York session. And do not be a masters of all trade. Master one skill and you will be completely fine. Understand, guys. You guys must understand. Patience. Patience in the stock market is key. Without patience, you're nothing. Have patience in the stock market, guys. With that being said, as always, stay blessed. And you know it, mind your business.